Hello and welcome to the CFA Society San Francisco podcast, where we interview and discuss trends with leaders from across the investment and finance industry. This month, our host, Tanya Subatang, Membership Director with CFA Society San Francisco, had the pleasure of speaking with Alex Chitea, founder and managing partner of Funston Capital. Listen in as they discuss leveraging generative AI within private equity. Alex, good morning. Great to see you again. How are you?
Good morning. I'm great, Tanya. Great to see you again.
I'm so excited and thank you so much for joining us at today's podcast. For listeners, I'm so excited to have Alex because he is our managing partner for Funston Capital. And Funston Capital is a entrepreneurial investment fund, correct? Where you source, acquire, and operate a tech company.
Yes, that's correct. Pleasure to be here.
Yeah. And, such interesting background you have, Alex, because you've had roles in your career early on at Google and Walt Disney Company. That's so impressive.
Yes, thank you. Thank you so much.
So kind of jumping into our questions, having just mentioned those two companies, you started your career in technology and invested in venture capital and are now focusing on the SMB private equity market. So what is it that interests you most about this market?
Yeah, as you mentioned, my career spanned both operations and investing roles before I decided to focus on the SMB private equity market. And right now, I got to a point where I'm looking to bring the two operations and investing capabilities by acquiring and growing a tech or tech-enabled company. So I'm looking at companies that have a history of stable recurring customers and predictable cash flows, and those companies exist in the sort of SMB space in the private equity market, and that market has historically had strong returns and robust deal flow within the SMB market, and that the companies are typically very attractive to private equity, for those reasons. They are, generally speaking, companies that are lesser known, less established, so they have the potential for market and valuation inefficiencies that can eventually translate into solid returns for private equity portfolios. So generally speaking, because we're looking at this less efficient markets at valuations below those of larger buyout deals and public comparables, sponsors can typically acquire SMB companies at relatively lower valuations. So because of that, we are able to sometimes employ more conservative capital structures. So that opens up multiple routes to actual value creation at the end, including organic revenue growth, operational enhancements, add-on acquisitions, and managerial improvements, just to name a few. And many of these lower middle market companies, they are quality businesses, but oftentimes they've been either neglected or they have underdeveloped IT or quality, management information systems. And those risk reward dynamics have historically contributed to really good, strong returns in the SMB market over the long term for private equity.
So with the technological advancements of the last decade, what has surprised you the most about how private equity is adapting?
Yeah, that's a great question. So we've all witnessed generative AI, and I think that's the talk of the town these days. And that has emerged as a transformative force within the worldwide economy since ChatGPT launched in late 2022. We had that initial excitement, but afterwards, we really have been able to mine certain consistent depth of content and substance that has actually attracted the attention of private equity investors. So if I can, just take a quick step back and, frame generative AI for our listeners, it essentially, for private equity and for small businesses, generative AI serves as a crucial reasoning engine that's capable of participating in open-ended dialogue with customers. You can create a persuasive marketing material. You can scrutinize vast data repositories that can provide deep insights. And all of these little things are valuable business tasks that can help private equity investors be more efficient in their jobs and help with their portfolio companies at the same time. So I guess what we've seen, and what's surprising is the speed at which these forward-thinking private equity investors are actually starting to already harness generative AI capabilities to revolutionize their portfolio companies on the one hand, enhance their due diligence processes, and also augment their expertise as investment professionals.
Yeah, it's really interesting. So how are investors leveraging generative AI within private equity?
Yeah, I'd say savvy investors are already using these technologies to sort of transform companies, make better decisions, and boost returns. If I were to bucket, the way firms are mobilizing this technology, I would say within the portfolio, during the due diligence process, and then at the firm level. And I can go into each of these important ways. So within the portfolio, we see some key questions that private equity firms need to consider when it comes to their companies. And specifically, they need to understand how generative AI innovations can disrupt the portfolio company's value chain or business model. There are companies that are going to thrive in this new environment, and there are companies that are going to be significantly affected or altered by the generative AI technologies. So is there an opportunity to spearhead change through this technology, right? Will generative AI enable new competitors? And how will the competitive modes or barriers to entry be affected to protect against this disruption? So in general, we see private equity firms must work with their portfolio companies to test and learn how to address these questions, and most importantly, understand sort of what works and what doesn't in a very iterative and very, very fast way. And then once they do that, they should be able to prioritize investments accordingly. So that's within the portfolio, right? So at the portfolio company level, during the due diligence process, the investment professionals at private equity terms, they can do quick analyses of any target company, right? So there's, almost like a scorecard-based protocol with respect to generative AI and how generative AI will impact the companies that they would like to invest in. So they need to do that to evaluate the threats and opportunities presented by the technology. So we believe that over time, this assessment is going to be normalized, similar to how we currently have legal or commercial due diligence practices, right? So we also see firms that are leveraging these tools, AI tools, to expedite and refine the underwriting process, right? So generative AI offers a distinctive chance to sort of develop these prototypes during due diligence and sort of validate or refute certain hypotheses. So we're seeing many firms sort of adopt that during the due diligence process to kind of sift through their companies better, their investment targets better. And lastly, I would say at the firm level, you have generative AI providing numerous avenues for streamlining or automating back office operations, right? So, within deal sourcing, there are a lot of menial tasks that can now be easily performed through AI tools. So we're seeing the true potential in significantly broadening the information accessible to these investment decisions, right? So you have these tools that are ideal for scanning massive data pools for insights. So the investment professionals are not going to necessarily be turning to robo-advisors or robo-investors, but they will be able to use their time more effectively after, dealing with the output of these tools and using screening criteria and so on and so forth. So there will be a sort of supercharging of the investment professional, if you will, across the full value creation cycle, from sourcing, screening, diligence, all the way through portfolio management and helping the companies all the way to the exit. So I would say those are the three most important ways we're seeing technology sort of trickle its way down into private equity firms and eventually in the larger economy.
So kind of taking the flip side, what are some pitfalls of deploying generative AI?
I would say, the pitfalls are general technology pitfalls, right? Focus is essential, right? Like you want to direct investments towards select strategic or operational goals, right? Like ideally you'd like to have some tangible enhancements in profitability. So you have to do that really good match between the investment and your goal. Like any technology, generative AI is a tool, and it's best deployed in service of strategy and not vice versa, and doesn't create value by itself. So you have to explicitly link it to measurable business objectives. So these objectives, we've heard them. They're sort of everywhere in the press. Things like better serving our customers, understanding the metrics that we're trying to move, understanding the processes that we're trying to improve, and then sort of the people that we're trying to make more efficient. Customer service is thrown around a lot. So you need to sort of understand, the business objectives and then deploy the technology accordingly. A lot of investors are asking themselves already what the ROI on generative AI is, right? So they can understand intuitively that there's the potential for productivity gains, right? You can determine a clear return on investment. Determining a clear return on investment is actually pretty difficult because there are many benefits that have some indirect or non-financial impact. So although you kind of understand the productivity gains, it's really hard to understand sort of the future financial outcomes. I'll give you just a quick example, like utilizing generative AI to automate code generation, which is one of the first use cases, could enhance software developers' productivity, allowing more time for innovation and potentially speeding up the time to market for new features. However, ultimately, and ultimately this would lead to improve customer satisfaction, but quantifying these benefits in financial terms, in actual, bottom line, is a challenge and remains a challenge.
So, Alex, I know you have a busy day, but before you leave me, I have to ask, given your background in technology, what are trends or disruptions can we expect over the next decade?
Yeah, it's really hard to venture an answer for the entire decade as technology is developing at ever increasing speeds. I would also say that, when experts and people in general try to forecast the future, we tend to extrapolate the past, whereas we've seen with entrepreneurs, they invent the future that they personally envision. So there's usually a disconnect between the two. But with that caveat out of the way, I would say that AI in general, and here we can include the current generation of large language models, deep learning, etc., but also other paradigms that might actually emerge in the next decade. So AI in general will continue to shape businesses and more broadly society at large, and that will have an impact on the private equity's bottom line. We are at the beginning of the S-curve for this new technology, and we still have quite a long way to go until it's fully deployed and implemented, until it sort of works its way through all the processes in society. So what's already apparent is that we have this sort of marginal cost of knowledge that continues to drop, and perhaps in the near future, we'll reach a point where expertise will be nearly free. So, that the proverbial intern, like we all hear this phrase over and over again, how generative AI is like an intern that never tires. So that cost of knowledge, will continue to drop. And I do believe at some point expertise will be free. So it's going to be interesting what, the knowledge worker is going to do in that scenario. We're also seeing a really interesting intersection of AI and generative AI specifically with robotics. So that speaks to the marginal cost of labor that might eventually move towards zero as robotics and AI come together. We are seeing some, demos online and in some Amazon warehouses where, they're sort of using certain robots for certain tasks like packaging, etc. So I'd say the marginal cost of knowledge and marginal cost of labor moving towards zero are going to have a great impact on, businesses and society. And eventually, by extension to our discussion, they will have an impact on private equity as an asset class. So yeah, I would say we're still in the early days. There's definitely a lot of time left to start adopting these AI-enabled tools. So I hope that, people are not going to be afraid and they're going to sort of try to, start testing and learning and harnessing data and information in powerful new ways.
Wow. I mean, that's exciting things happening in our future, right? So
yeah, absolutely. I'm super excited about the future.
Yeah. Well, Alex, thank you. Thank you so much for your time today. I know our listeners probably gained a wealth of knowledge on generative AI and how it impacts, private equity. So thank you so much for your time. And I hope you'll join us again for maybe an update on what's happening in the industry.
Absolutely. It would be my pleasure. Thank you, Tanya.
Thank you for listening to this month's episode of the CFA Society San Francisco podcast. We hope you enjoyed the engaging discussion. Join us next month for another new episode. This podcast is produced by CFA Society San Francisco, a not-for-profit professional association providing professional learning and career resources to over 13,000 investment industry professionals worldwide. To learn more about CFA Society San Francisco, visit our website at cfa-sf.org or connect with us on LinkedIn.